Good morning, good morning, good morning, friends. You guys cannot see me. This is so frustrating. I'm having technical difficulties this morning. Let me see if I can figure out my issues here. I'm having technical difficulties, so you cannot see me. I'm here. I'm not really sure how to fix this, unfortunately. So we may just go without me today. Without seeing me, anyway. I hope you guys are doing good today. Maybe I'll try and come back. Maybe I'll try. I don't know. I don't care. If you guys can't see me, I'm sorry. I hope you guys are doing good today. We have a lot to talk about this morning. Hold on one second, Sadie. Sadie, my camera is not working now. I'm not sure what's going on. I wish that I could fix this, but there are issues here. So, we had CPI on Monday. CPI was no bueno. And the markets sold off. So now we are left with the question of where are we going from here? A couple things that I notice just right off of the bat. We did not make a new low. You guys know me. I'm a price action guy. We did not make a new low on any of the indices. You got SPY here. We got the Qs here. And we got the IWM here. So that's kind of important. We didn't make a new low. All that's selling, and they weren't able to take out lows. So it's going to be interesting to see how they end up resolving this mess. If we go, so yesterday we kind of very quietly launched futures on the platform. So something that I pay a lot of attention to, of course, is futures. And if we go to futures this morning, overnight, the overnight session, this is our overnight kind of through here. They sold it off kind of like what, at like 5 a.m., 7 a.m. Eastern, something like that. They sold it off. They've bounced it pretty nice back into kind of the consolidation area from the overnight session, and they've rejected. So we'll see kind of what they're going to do here. We have jobs numbers coming up in about 25 minutes. We've got retail numbers coming up in about 25 minutes. And I thought that it would be nice to have an additional voice onto the show to help us kind of understand maybe what to expect here going forward. Maybe what to expect from retail numbers, what to expect from jobless claims, and also just how to be thinking about what these numbers mean. So we've got our buddy, Andrew from Pristine Cap. He's going to be joining us today on the show. He's giving me a jingle right now. Let me answer this call real quick. So bear with me if I get this really wrong. We've only done this once, so I just want to make sure we get it right. But let me bring Andrew on. Andrew, can you hear me? Let me do something real quick. Let me turn down this music because I've got you really quiet too, Andrew, on my computer. I'm going to turn down this music. I'm going to bring up my volume here.
Nice, man. What are you playing?
Oh, I just like sleepy lo-fi beats in the background. Same thing.
Nice.
Yeah. Let me know if anybody who's tuned in right now, let me know if you can hear Andrew. Let me see here. Man, I'm having like crazy issues with my computer this morning. I don't know what the heck is going on.
Me too,
But
man. I just had some internet, hopping in and out. It's all good.
All right, right on. Mike. All right, Mike's here. Madhukar says very low. All right, give me 1 second, gentlemen. Let me get this thing figured out here. I apologize. We're learning. We're growing. We're figuring things out. Andrew.
To raise the volume a little bit on my end as well. Let me give that a shot.
I'm
Okay,
bringing
output volume. Let me crank it up a little bit for you guys.
Matthew, Madhukar, Carlos, can you guys hear him a little bit better now?
see.
Just
Okay,
say
so I just
anything.
cranked it
Yeah.
up a little bit.
Yeah, and I cranked you up on my side too. Yeah, a little better. All right, we'll keep on going here. I'm gonna keep on turning you up. Sing for this. That's funny. Okay, good volume now. We're good to go. Okay, so next thing I'm gonna try and do, Andrew, share your screen with me if you can.
Okay, so let's see. Share your screen, and I'm gonna share my charts. Let's
Yeah,
see. Think or swim. Go live. So let me know if you can see my screen.
I sure can. Yep. Let
Oh,
me.
sweet. So we got
Yep.
it working. Awesome.
We got it working. Now I gotta go.
Awesome. Awesome.
All right, hold on one second. Let me think about how I gotta do this. I'm such a noob, you guys. I'm sorry that I'm such a noob at this, but man, I'm such a noob at this. Okay, we're going to go to Andrew here, and we're going to go full screen. All right, so now everybody should be seeing Andrew's screen in full. Yes, we're good to go. All right, sweet. So, Andrew, talk to us about, I guess maybe about your thoughts on CPI, the price action that we saw off of CPI, and then maybe what we can expect going into today with jobs numbers, retail, and all that stuff. What are you thinking?
Yeah, oh my gosh. A lot to unpack there. Yeah, so CPI, I think heading into the CPI, like you'll notice, like if I pull up the chart right here, we had this massive run in the market up into the event. And I do think there were a lot of players, including myself, that thought, okay, we're going to get another deceleration in the CPI. It's going to be the second one in a row. And, that could lead to a market rally. It could lead to a Fed pivot
Yeah,
and open up the door to a lot of positive outcomes. Well, when we actually got the numbers the other day, they did not come in as a deceleration. You can see right here on my screen. I always look at the month over month numbers. That way you can actually see how the CPI basket is changing price. If you look at the year over year, it can be a little bit confusing and the data is not really as up to date. But if you look at this month over month number, we actually got a slight acceleration in August. And then when we got the PPI yesterday, we saw the same exact thing, another slight acceleration here. So that's exactly what the market does not want to see. And check this out. So this is a tool that I like to use on investing.com, and it's their Fed rate monitor tool. This thing is pretty useful. It'd be awesome if even like on TrendSpider, this would be like a great addition to add in. You can see now we're going to have a Fed meeting in 6 days, right? It's next Wednesday.
right.
Now the market's pricing in a 75% probability that we're going to get the 75 basis point rate hike. But now, this was pretty unthinkable just a few days ago. The market's pricing in a 25% chance we're going to get a 100 basis point rate hike. It's pretty wild stuff. And the market obviously is just not really responding very well to it. So we got this big red candle the other day, and the S&P 500, as measured by the SPY, was down like 4.35%. It was pretty wild stuff, and we erased pretty much the entire run-up into the inflation report. So, yeah, yesterday as I was watching the market, I saw we bounced like 0.3% or 0.4%. And that's, literally like 1/10 of the decline that we had 2 days ago. So that in terms of a bounce, that's like nothing. And it doesn't really give me any confidence that we've seen like a bottom in the market. So like
Right.
typically when you get a big flush lower, what you really don't want to see is you don't want to see just like a consolidation that happens after, because then you really don't know if that down auction is over. So like even today in the pre-market, we're trading down, I see 0.25% as of right now. We're going to have some economic data coming in a few minutes. That could certainly change that. But right now, this sluggish action after that big decline, it it leaves us open to potentially test this red level that I have marked on my chart here. Let me move this thing down a little bit so you can see. So this red line, this is a virgin point of control, and it was established back in August here. This level, it's at about 38.68 spot 5. It does seem like it's pretty likely that that could get tested. So right now, if you notice, like we're sort of sitting in no man's land where we're consolidating after that big drop. We've got some key moving averages up above us at like 4,051. That's the 20-day SMA. But then we've got this VPOC down here. So for me, I have no confidence that we're going to move to the upside. So yesterday, like for example, like I day traded the double leveraged ARK Innovation ETF, ticker symbols TARK.
Mm-hmm.
Those can be great for day trading. But other than that, I raised a little bit of cash. Right now I have like 23% cash in my portfolio. And yesterday, as we were trading towards the highs, I did add some S&P 500 puts. I just added them in very small size. That way, like if the market declines, I at least have, something on the books that could protect me. But if the market, decides to bounce, it's not really going to be like, a big deal either. So that's kind of how I'm approaching it. Like there's times in the market where I really think, okay, I have a really high edge here. I have a strong directional bias. I would say this is one of those times where I would call this setup, it's above my pay grade, where like big players, they've got to figure this out because this is like a huge macroeconomic conundrum that we find ourselves in where like the market's getting demolished, but the inflation problem is not done yet. So yeah, I think these big institutions, they've got to figure this one out. So I'm just trying to, stay as safe as possible while they do that,
Right.
if that makes sense.
For sure. Yeah. What for folks who are maybe don't really understand how to process some of this kind of, it's not weird data, but like jobs numbers data. Talk us through like what we can anticipate or what we should anticipate from price action. Let's say the jobs number comes in low, or if the jobs number comes in higher, how should market participants kind of be thinking about these numbers?
Yeah, absolutely, man. So I think with the numbers, one other very useful tool that I use, this is Trading Economics. This can be a great resource for you. And there's a ton of other websites as well that will give you the news. One thing that really helps, like if you're just getting started, you can screen this out by the number of stars. So like 3 stars would be like, okay, things that are very highly impactful. Usually I take mine and I move it to 2 stars. And for the jobs numbers, let's see, today is Thursday. So we're going to have those out at 8:30 in about 15 minutes. Every week we get these jobs numbers, and these are just showing, job gains, job losses, etc. The numbers that are super, super important, we get a monthly NFP report. That's like a 3-star report that always moves the market. These weekly jobs numbers, these are a little bit less important. But right now we're in this sort of phase in the market where good news is bad news and bad news is good news. So I think if you want to understand how the news could impact the market, you really have to understand what phase the Federal Reserve is in. Like right now, the Federal Reserve, they're very hawkish and they're tightening monetary policy. So good news for the market would be either A, news that inflation is slowing, and we just got those inflation reports. Unfortunately, we didn't see that.
Right.
The other quote unquote good news that we could get is signs that the economy's slowing down. So as wild as it is to say this, the initial jobless claims, the consensus is for 226,000. I believe good news for the market would be like, let's say this comes in at like 300,000 or 275,000. Anything above the estimate would mean more Americans lost their jobs this week. And if that's the case, then maybe the Federal Reserve gets a little bit more dovish. So that's how I would be interpreting this. If we get a number, say if it comes out at like 150,000, like barely any job losses this week, I think the market's not really going to respond very well to that because they're
Right.
going to say, "Oh man, the Fed's got way more room to tighten."
Right.
So yeah, it just depends on what the Fed is doing. But right now, I think it's bad news is good news and vice versa.
Yeah, yeah, that's how I understood it too. Wanted to make sure that that's where your head was at. Right on. So essentially, we're looking for a hotter. If we're bullish, we're looking for a hotter than expected jobless claims number If we're
Yep.
bearish, we're looking for a lower than expected jobless claims number, essentially.
Exactly, yeah. And I see we've also got this industrial production out as well. I would say same exact thing applies. And we have retail sales as well. So I would
Yep.
also say same exact logic applies.
Right. Like if retail sales are lower than anticipated, that's a good thing. If they're higher than anticipated, that's bad, right? Because if they're higher than anticipated, people have disposable cash. They're willing to spend it. If they're lower than anticipated, people are starting to tighten up. They're not spending as much cash. Things are, is that the general what you're saying?
Exactly, yeah. And like let's say we see like, oh my gosh, retail sales is like super good, like it's comes in above expected. Then suddenly all the macro guys are like, well, if these retail still have so much money to spend, then the inflation problem's not going to go away. So that's really like the conundrum. One thing I do as well when I'm interpreting the reactions, I always like looking at the equities because at the end of the day, it's all about the reaction, right? So I always come in with a bias of like, okay, here's how I think the market would react. But the most important thing for me is always, how does the market react? So in order to determine that, I like looking at stocks, but even more importantly, I like looking at these bond futures contracts. So there's the slash ZN, which is the 10-year Treasury futures, and then there's the slash ZB, which is the 30-year Treasury futures. So I notice with the economic data, looking at the bonds really helps because the bond market always responds to the economic data, and the bond market really is the smart money. So like right now we can see these bond futures for the 10-year treasuries. These are just like on their death march, right? Like they're just heading lower, trending lower and lower.
Right.
And we actually hit this pivot level, which is an extension away from this monthly value area. And right now these bond futures are trading red in the pre-market. So some of the data actually comes out looking good. And when I say looking good, I mean, looking bad. And then maybe these bond futures rally, and that could be a good scenario for the market today.
Got it. Interesting.
Oh,
Okay.
but yeah, we don't want to see these like continue to just like sell off and cascade. That's exactly what we don't want to see.
Right, right. So I guess last bit before we let you get on with your morning, pre-market morning. What have you got your eye on today? Any particular stocks that you're liking? Anything of interest to you?
Yeah, so this is what's very interesting, man. So like my overall market bias, I use a trend model, and it's like a very simple template that helps me, just quantitatively determine, okay, according to my strategy, here's what I think about the market conditions. My trend model has been at a -3, and when it's at a -3, my top priority is capital preservation. Okay, like if I don't lose any money, that's a big win. But for some odd reason, I'm still seeing leading stocks that are doing
Right.
very well. So let's look at a few of them. So a few good stocks here. I noticed the energy theme is still working very well. It's been working all year. This name Enphase, this is my largest position that I have on via common stock currently. And Enphase, we had some very nice earnings. The stock consolidated for a couple months, and now it's getting a little bit more active. You can see we're getting some volume coming into the stock. We're trading above those key moving averages. Yesterday, the stock closed on the highs. I really like this one, and for me, my target is up here at around like 340-ish. That's probably where I'll take my position off if it gets up to there. But there's a lot of nice names. I'll show you this one. This one I do not have on currently, but it looks pretty decent. This one is ChargePoint. And we just got some news, and one of the
Interesting.
people in our one of the people in our trading group actually flagged this one for me. And apparently there was some news from the Biden administration that they're going to be doing some additional subsidies for these like EV charging stations. So this theme, like the CHPT ticker, look at the candles that this one has put in the past couple days. Not too shabby, right?
Yeah.
Yeah, so this one it looks pretty good, but I would say like if you look at the weekly chart, it's not quite as attractive as Enphase. Look at this. So if we just pop out, you can see this one has kind of been in a downtrend. Now it's kind of moving sideways. I always like looking at the weekly as well as the daily.
For sure.
And we have this yearly value area right here. Definitely looks pretty interesting. And then I'll show you one that looks very actionable. This is one that I currently have on in the portfolio as well. Look at this one. This is Wolf Speed. It's a semiconductor stock. And look at this one. This one is just like beautiful. This chart just, oh my gosh. So Wolf Speed, this gap over here, this happened, they reported earnings, and they really just knocked it out of the park, and you can see like some very nice volume acceleration and a nice power earnings gap on that earnings report.
Yep.
And then the stock has kind of moved sideways while the market, the market's been pretty much like tanking for the past couple of weeks. And this 20-day moving average caught up to price. And now we are trying to poke our head out above this consolidation. And I see we have a virgin point of control up here around like $133 and change. So that's the level that I'm targeting. My cost basis for this one is about $115. So it's not like I'm like, super in the money on this trade yet. I have it on via common shares. And I'm looking into the end of the year to see if we can get, above 130. That's really the target for this trade. So this one looks really good. If we were not in such a tough environment, I'll probably be adding to my position here, but just because, my trend model's negative, I'm going to make sure not to add, just to be a little bit more cautious.
Nice.
That
right
one looks
on.
good.
There's some good picks.
Yeah, I think I have one more for you. Let me see. I keep a list over here. Every time I see a name that looks pretty good, I move it to the side. Let me see. We got PRVA.
Yeah, I see
Oh,
I see some names on your list. We had a TrendSpider trade idea space on Tuesday, and SSMCI or SCMI, I can't remember the ticker, but Rosanna flagged that one.
Oh yeah. Yeah, this one looks pretty interesting as well. This one, it's definitely gotten kind of tagged with the market weakness a little bit. I
Right.
had a position on in this name. I think I added it on this candle right here. I ended up stopping out of it. I believe it was the following day, just because this one, the market environment was getting a little bit weak, and I just wanted to take a trade off. But it still looks pretty good. So yeah, it's kind of holding this support. The other name I think for everyone in the space could be worth watching. AEHR. This one just like phenomenal strength the past 2 days. It's moving on very nice volume, and it's above these key moving averages. Worth watching. Then one more that I actually want to do more research into this. It's kind of like if you're like a meme stock trader or whatever. This CFVI, it's a SPAC, and it's merging with the company Rumble. I'm not sure if you're familiar with Rumble, but it's like basically like YouTube, but it's uncensored, uncut, that sort of thing.
Right.
And this thing, keep in mind the SPAC price is $10. So it's pretty extended from 10, right? It's almost at $14. But if the market ends up having a big shakeout, and let's say this one like ends up declining, the closer that we get back to $10, I'm actually interested in acquiring this SPAC, because it kind of reminds me of like when everyone started chasing after DWAC. It was like, Truth Social, oh, let's go for it, it's uncensored. CFVI actually seems like it's the same kind of idea, uncensored social media, but this one actually seems like it could end up being like a legit company. So that's why like I'm interested in this one. At this level right here, I would say the risk reward is like pretty 50-50, because maybe on the upside you get up to 15. On the downside you have a lot of downside as well. But this is one where I wouldn't be entering this one today, but it is pretty top priority, because if it sells off, gets closer to 10, I'll likely be adding this one as like a thematic trade.
Cool.
So
Right
those
on,
are the
man.
ones I'm looking at for today. But today, to be honest, like these can be the most challenging days, man, because market's not doing a whole lot, right? But there's always that temptation of like, just throwing on like 10 trades and like trying to make money even if the market's not doing much. So yeah, for
Right.
me, if I see that it's not doing a whole lot, I'm gonna be jumping off the desk, hitting an
Right.
intraday gym sesh, like just trying to do what I can to prevent myself from making dumb decisions.
Right. Smart, smart. Well, Andrew, man, thank you so much for your thoughts. this morning, and we do really appreciate it. I'm going to leave you with a ticker too that you haven't mentioned, but looks very similar to some of these setups. It's KMPH. This is one Stock Swing Alert gave on the space the other night on Tuesday. This one's kind of got an interesting looking little setup too. So take a look at that one.
This one. Thank you.
Yeah, for sure, man. All right, well, everybody, Andrew, our good friend from Real Pristine Cap, give this guy a follow. He's posting awesome information every day. We really appreciate, Andrew, you being here this morning with us. We're about to get these numbers here in 1 minute, so we're going to jump off, Andrew, and have a great rest of your day, man.
Awesome. Thank you so much, Jason. Appreciate you having me on. Enjoy your day, everyone.
All right, guys. Later. All right, let me get you guys switched back to the main chart here. And let me get some music going again. So that was Andrew from Real Pristine Cap. He's a good buddy. We're happy to be buddies with him. Michael Nouse, what's going on, bud? Robert Brush, Crypto P. Hope you guys are doing good this morning. And the number has come out. I do not know what the number is. If anybody knows, I suppose we'll know pretty quickly. If it was hotter than expected, cooler than expected. Let me throw up Twitter real quick and see what this jobs number's looking like this morning. If anybody knows, hit me with it. I'm curious. All right, so market reacting favorably so far. I have not found the number yet, though. What are we thinking, guys? I'm still having a hard time finding this. Let me Google it and see. Weekly jobless claims, 214,000. Is that correct? Am I reading that right? $213,000 last week, estimated 227. So less than expected, which in theory is not a bullish thing for the markets. So it'll be interesting to see how they react here. Retail sales were good, you said? Let's see. Increase 0.3, estimated negative 0.1. So that just goes to show that the market is still, or that the economy is still strong, right? Which then, like Andrew was saying, this might give a little bit more firepower to the idea that the Fed can continue raising rates and maybe even potentially raise them more than what is anticipated. So that might be a little bit concerning for the bulls here today. We're going to have to watch and see how things shake out over the next, over the next hour here in this pre-market session and then into the trading day. Interesting results on those jobless claims numbers. I don't know I don't know, 10,000 off. It's not a huge difference, but still lower than anticipated. What are y'all's thoughts? Where are we headed next? What are you thinking? Let's see what's going on the other futures. Pretty much everything's looking the same here, which about is what I would expect. RN Solid says 3,900 SPX. Robert says short-term lower. Robert, you got targets? Actually, let me do something real quick. Let me throw up multi-symbol view real quick. I'm going to go 4x4. I don't know if you guys are aware, but we recently added multi-symbol view to the TrendSpider platform. A nice way to keep your eye on a handful of things at one time. Yeah, Future's not really minding this data so far. Interesting to see. RTY kind of has the deepest, kind of the deepest sell-off of the bunch. They might be starting to sell it here now. If you're a TrendSpider user, so what did come with the data? Well, while we had a jobs number, a jobless claims number that was lower than anticipated, right? The number was 225. Or the anticipated number was like 227,000, and the number came in at 213. So less people are jobless, right? Filing first-time jobless claims than anticipated. Less people are jobless, then that means that in theory the economy is stronger than anticipated, right? Because less people are filing for unemployment. If the economy is strong, then that gives credence to the idea that the Fed can continue to raise rates because the economy can take it, right? So it just pushes the percentage chance of increased rates and maybe even bigger increases than we initially anticipated. Like Andrew was talking about 75% chance of a 75 bips rate hike, 25% chance of a 100 bips rate hike. Less jobless claims means that they can more comfortably raise rates because the economy can take it. People can take it. People aren't losing their jobs. People who are hiring are not, they haven't stopped hiring, right? Employers haven't stopped hiring. So that's kind of how I think about it. If the jobless numbers had come in above expectation, that would actually be a little bit more bullish because it would maybe suggest that they wouldn't be raising rates, or not that they wouldn't raise rates, but the percentage chance of a higher rate hike goes down with an increased jobless numbers. And with retail too, if the retail number is hotter than expected, that means people have more disposable cash, which again gives more confidence to the Fed that they can raise rates comfortably because people can manage it. So that would be my analysis. Weil, how do you think about it? What's up, Trey's mustache? Fubo price target increase, now giving a squeeze signal on Fintel. Yeah, Fubo's been a monster past couple of days. We can take a look at it real quick. Had a pretty nice little sell-off from the move. When was this? Back in middle of August. Let's see what pre-market looks like. 505. Yeah. Definitely been keeping an eye on this one. Actually was playing it past couple of days. I just sold my position in it yesterday. But we'll see. We'll see how it goes from here. So what I would have anticipated, I would anticipate probably the market's not responding well today. Futures hanging in, trying to hang in, but if retail numbers are up, if jobless claims are down, I would consider that to be pretty bearish. It's not, in my opinion, that's not really what you want to see if you want to be bullish. Hey, yeah, you know, if you're not sure what to do, the best thing you can do is do nothing, right? You can't lose anything doing nothing. There's an old saying that says you'd rather be out of the market wishing you were in than in the market wishing you were out. So that's kind of how I'd be looking at it, Weil. But for anybody here who is a TrendSpider user, if you haven't yet, futures are available on the platform. If you have not activated them, you can do that by simply just typing in a future symbol. So future symbol would be something like ES, maybe ES1, ES2, whatever. So you just type in the future symbol. It's going to take you to that, and you'll see a screen. You do have to fill out a little data agreement to receive that data, and it's $7.50 a month for futures data on the platform. If you happen to have a coupon with us on your plan right now, you're going to get the discount that your coupon is. So if you have a 50% coupon, 50% off coupon, the futures data is going to be $3.50 or $3.75. So keep that in mind. I am going to very quickly send over a few items to you guys so that you have them. For anybody who is not a TrendSpider user, is there anybody here who's not a TrendSpider user? If you're not a TrendSpider user, let me hook you up with a few items here. Just grabbing something real quick, y'all. Hang tight with me while I grab these items for you. If you're not a TrendSpider user, here's a discount code for you. This is good for 35% off the plan of your choice. So Chris Cantrell, if you're interested in being a TrendSpider user, use this coupon. Get you 35% off any plan that you want. Would love to have you on. And it's a 7-day free trial, so you really got nothing to lose. Give it a shot. Let me also hook you up. We've got a Discord these days. Lots of users in the Discord sharing ideas back and forth, scanners and these sorts of things. Join our Discord. Come hang out with us over there. What else, y'all? Yeah, that's really all I got for you. But But I do want to say tonight at 8 p.m. Eastern Time, we're going to be going live with Theta Warrior. Actually, I can get you guys the link to it. Let me do that. Going live with Theta Warrior tonight to discuss all of the charts that you guys are curious about. He's going to be doing a live charting session with us this evening, 8 p.m. Eastern Time. We love Theta. He's such a good dude, and he's a great trader. So if you're looking for, an expert opinion, expert viewpoint on the charts that you're looking at, maybe a position that you're in, or, maybe tickers that you're watching, whatever it may be, here's a link to the show tonight. Again, that's at 8 p.m. Eastern Time with Mr. Theta Warrior. And we'll be there for an hour taking all of your chart requests, or as many as we can. We usually get through a good amount of them in an evening. So join us for that. All right, well, let me see here. Let's take one final look. Before we get out of here, let's take one quick look at what's going on with the futures right now. Actually, I'll just go to this. Yeah, so it's going to be interesting to see how this plays out, because they're definitely responding differently than I would have anticipated. That's for sure. Maybe they're just trying to hold it in the pre-market session, and we get a move lower once the market opens. I'm not really sure. We're just going to have to keep a close eye on things and trade them as they come. So with that, guys, I'm going to jump on out of here. I hope you all have a great rest of your day. Thank you for popping in for a little while to hang out with Andrew and myself. It's been good hanging out. And again, like I said, we'll be back tonight, 8 p.m. Eastern Time with Theta Warrior. So do come kick it with us and get your charts reviewed. All right, y'all. Have a great rest of your day. Trade them well. Be safe out there. And we'll talk to you soon.